And when you look at the technical picture of the market, it's been kind of getting weak underneath, right? Internally. If you look at the advanced decline line, advanced decline volume, it's been kind of, market's making all-time highs, and AD line is not making all-time highs. There are not enough new all-time highs happening, new highs in the stocks, in individual stocks. So you look at all these things. On top of that, you look at that every schmo is in the pool. Retail commitment to the market is at the highest levels it ever been. NASDAQ to GDP ratio is at it's above the 2000.com bubble. Warren Buffett is selling stocks like there is no tomorrow. He's up to $350 billion in cash sitting on T-bills. I mean, how many more things should there be? You just got to put one on one together, okay? Now, the technical picture changed quite a bit for me this week. It was hanging in there, but now I'm looking at charts and I'm going like, a lot of damage was done. So more importantly, when NASDAQ is down 8%, and S&P is only down 5%, which is the garden variety correction at the moment, but I don't think it's going to end there. I think it's going to be something different this time, okay? My opinion again. No advice. This is not trading or financial advice. So what am I seeing? Market is at super, super critical juncture. I will put the charts up in a minute and we'll talk about it. But one other thing about charts. Charts are like, my comparison or my analogy of charts is like waves in the ocean, okay? If you sit at the beach and you count the swells come about every minute and a half, let's say. And if you put a timer on it, it'll be a minute and a half. So trying to say is that patterns do repeat, just like the, waves in the ocean, just like the swells in the ocean. This is the same thing about technical analysis. Patterns do repeat. There are patterns, literally there are patterns that are written into algos, meaning, golden crossovers, right? 50 crossing the 200 to the downside, something pulling back to its 200, 200-day moving average. That's watched very closely by a lot of institutions. So to me, yes, it's the past. But if there are enough people watching the same thing and they're going to react on it, and you should expect some sort of a violent move happening at those key levels. Would I use technicals for day trading? No, I'm not a day trader anyway. But I have no clue how these people do what they do. All power to them. I'm not saying it's not a valid thing. I just can't do it. I've never been good at it. But there are critical things that happen. So if you look at your portfolio, so you go, Serge, market's down 8%, but my portfolio is down 30%. Yeah, because there is something called beta. If you have a 4 beta stock that you own, and beta is high on like Teslas and things like that, okay? So that means when you own a stock like that and market goes down 8%, well, 4 times 8, which is the beta, is 32%. Your stock's going to go down 32%. That's what's going to happen. There's no ifs and buts about it. So when you're picking like utility stocks, very low beta, right? Tobacco stocks, low beta. Tech stocks, super high beta. That's why Nvidia went down like 14 points or whatever it did yesterday. But market only went down 2.5% yesterday, the triple Qs, right?